In today's video, we're going to be talking about a trade that I took, which was essentially the bottom of the market before we made a big move up. This trade, as always, was live traded, executed in front of my group that I trade live every single day. If you're join that group, the link will be down below, per usual. But this trade was awesome because we were super bearish right off the open, and people wanted the weekly opening gap. And I agree with the overall idea of being bearish for the day, but I saw a really great opportunity to potentially caught a nice reversal trade, and we essentially bottom ticked it. This is an exact entry 25968. I posted it in my Discord, of course, but that was the exact entry long. I did 3 minutes, which is an overall smaller position size for me. Usually I like to do 5, but 3 is good when you're trying to catch a reversal trade. Of course, sometimes it'll fail. So did 3, and this was pretty much the trade. I had this level right here in 943.25. We were like, Antonio, how'd you get this level? And then let's jump to the larger time frames real quick. So we got in Q and ES on the left and the right. We'll mostly look at in Q. We can also, we'll move this to the 4 hour as well. With ES, we'll talk about both. So when I was looking at the market today, obviously we were bearish from yesterday. The overnight session came down. We did have a FOMC. Right after that, we also had some news after hours with different earnings. We waked up, as you can see right here, and came down from the all-time highest level. So we see this close red, and then the overnight session being red, you expect lower, as you should. Obviously, we have a really nice overall target for the rest of the week, I think, which is going to be this weekly opening gap. And I mentioned before, this is probably what I'm expecting the overall market to go. But you have to understand, everything just goes straight down. It's very rare that we'll just get a straight move down. So I was looking, where can we get potential reaction, potential bounce before we get that move down later on. I marked out this level right here. Because we have to understand, right here, right there. This low. This low was important because it's the latest low before we made the move to the all-time highs. And the way the market moves, it's going to move in expansions and contractions, essentially, right? So you get a strong move up, you contract a little bit, and then you get the other move up. But these contraction points are really important because that's where volume was actually traded. So more often than not, that's where you're going to get bounces and reactions from. Well, when you get price that looks like a fair value gap, essentially, so here we see all these kind of stacked fair value gaps, it means it was a really low level of price. Bulls were really strong, bears were staying out of the picture. So when price comes down to flush it, it does so pretty quickly. As you can see here, through all these fair value ups, it was pretty quickly for the market to be able to flush it. It was really simple for it. Apart from, of course, if there's news like there was here overnight, I gave that bounce. So I thought, hey, if there's going to be bounce, more likely it's going to be there. Now, it's not going to be good enough for a confluence. I like to see a little bit more out of that. So obviously, I fibbed out. This is our weekly opening gap to the very top, and of course we had our trusty golden pocket tool right there. So I'm stacking up 2 confluences there, and then there's a third by looking at this 4 hour fair value gap. So trades that you have 3 more confluences that are on the higher time frames, those are trades that are good enough to try at really take a stab on. You can do so on the smaller position size as well. What I really liked about that level was also right at 0.5 of that golden pocket, and it's a really strong golden pocket because it was from the weekly opening to the high. So it should be a level that gave a reaction. So that entered right at the close pretty much of the candle that bounced from it. So it was this candle. And I really like to take trades like this because the RR is really, really high. So even if it fails here and there, we had a 20-point stop loss with a potential target of all the way up here, which was the New York opening. Go back up all the way to the New York opening. So it was a 9-hour trade. Of course, we took some profits along the way, and there was different other confluences you could have taken alongside that trade as well on the smaller time frame. Once we saw this push higher, that should probably give you some confidence that the market was probably going to bounce. Also, what I really liked on ES as well is that ES was essentially did not fully tap the weekly opening gap, but it pretty much did, because the weekly opening gap would have been the opening of this candle right here. As you can see right here, this is a green candle, so the opening of the candle is the bottom body of it. So we had essentially a divergence. Yes was at the weekly opening gap where you would expect a bounce, while NQ was not. So this gave me, again, added confluences on all these larger time frames, really, really strong. So you would expect a bounce. Of course, this can flush at any point. This can anything can happen, right? But these are when you take those trades that are a lot riskier, but the reward is really there because you have an A plus setup. It's not every week you're going to get a setup like this, but when it does, you do want to capitalize. That's why you don't only want to trade continuations. You don't only want to trade reversals. You want to learn how to trade both, and it's exactly what I do. Know when to trade the continuation setup, know when to trade the reversal setup, and that's exactly what we did here, where the whole team printed. Everybody made a lot of money today, and it was a really beautiful trade. It was one of those trades, zero drawdown. You pick up strength, you go straight to the P, and it was really, really beautiful. These are the type of setups you want to study. I always tell people the setups you really want to learn and master are the setups that when you enter, you have zero drawdown, because it means everybody on all the time frames was agreeing, hey, this is an area that I should long. People on the 5 minute, people on the 15 minutes, hourly, and 4 hours, and daily, they were all like, hey, this should be a strong level. We should definitely be bouncing from this level, which again, we did. That gives you those trades that pick up a lot of strength. As you can see here, we had a really big move down on off the opening. So a lot of people were shorting down here, thinking to catch that continuation to the weekly opening gap. But when you're doing that, you are just hyper-focused on a small part of the overall market. Overall, yes, we do need to go lower, and I think that we're going to go lower to the weekly opening gap, but we have to understand you're not just going straight down, and your executions, your entries on these trades are just as important as the actual idea itself. So if you short it, for example, down here, then you're going to get that weekly opening gap, you're going to get stopped out, and then more than likely this eventually will play out, right? And waiting for those confirmations and waiting for the higher time frames is always a key aspect of all trading. It doesn't matter if you're trading reversals, it doesn't matter if you're trading continuations. You want to know when to wait for the right times to actually enter your trades, right? For example, you don't want to be short in the bottoms and you don't want to be longing to the tops, and then you go on tilt when you realize, damn, my idea was correct, but you just couldn't execute on it. And price action like this is really great because, as you saw, we got straight deliveries up and then straight deliveries down, making the setups even more clean, even more easy to just hold for those big wins. Whenever you're entering a trade, you have to ask yourself, right? If you're short, where is your delivery of that short target, or at least the first delivery, before more likely you're expecting a bounce? Again, kilos, understanding where liquidity is sitting, which would have been right here, where those price traded, not through all those big fair value gaps that are just going to get flushed and ran through, and understand the difference between a void and a fair value gap, which I teach in my mentorship group, and understand where your GP, your optimal entry would be, which is drawing the right fib. And this should have been an easy one for everybody that studies fib and has learned the golden pocket from me, which I have a bunch of videos on that you can go watch, is how to draw them correctly. And then, of course, having the confidence in your trade, because when you take trades like this, when everything is flushing, everybody's like, oh, we should be bearish, whatever the news, you got to still have confidence and understand that your emotions play no effect to what the market is going to do. And a lot of times when everybody's screaming one direction, the market is going to play games and go the opposite direction because it likes to grab the liquidity. So it takes a lot of courage. It takes a lot to get into trades like this. But the more you practice it, the more you get better at it, the more you start learning at the bottom and top take, the better it gets. A lot of people trade the bottom top take with standard deviation. Golden pocket is essentially a form of standard deviation, so it works very, very similarly. And if you do like these trade recaps, this is essentially one trade I took. I did take on my own a smaller short right around here. So this trade here goes after, again, I'm thinking, what is my target? We had delivered to my target. I'll get out this trade about 990, 995, something like that. I was able to get out. It did kind of continue down. Again, it wasn't just as clean as it was before. But my target was like, hey, the New York opening is a key area. And we had little equal highs right there sitting there. I thought that's more than likely where price wanted to head. We got a little pop above that. We tapped into this really big 1 hour gap, and then we got the move down. Again, you have to understand your highs and lows, if you know the spot the correct ones, are going to be your targets. That's why I set my TPs where those highs and lows are, because more than likely the reversals will happen at those key highs and those key lows. If you enjoyed the recaps, if you want to learn from me directly, links will be down below. But if you just want to, stick around for the free YouTube videos. That's also completely fine. Just make sure you're subscribing down below, and the big red subscribe button. I don't know, is it still red? I don't even know. Anyways, I'll see you in the next video. As always, have a good rest of your day.